Alright traders, BA here with an update on some of the economic models I follow. I like to look at the yield curve and the initial claims for unemployment. So those are the two things that I start out with on the economic models, and when those things start to break down on me, then I've got about 13, 14 other models I start looking at just for confirmation. So we're going to take a look at the first one here is the 4-week moving average of the initial jobs claims, and you'll see here on the chart these fill up the screen here. There we go. The shaded areas are recessions, and this goes back to 1967-68 time frame. All the recessions we've had since then. What you'll notice on the job claims is we are not at an all-time low. That all-time low was back in the on this chart back into the late 60s, 68, 69 time frame before the economy started really shifting on us. So it wouldn't surprise me if we made it back down there to test that bottom before this market turns. First off, let me just clarify, I am still bullish on this stock market no matter what's taking place in the world. And there's a whole lot of fracturing taking place inside the economy right now, which is setting up what I think for a surprise run to the upside, which I've been saying for a couple of years now. That's what will end this bull market, is just a huge up move. And then we'll have a huge catastrophic down move that the middle class will end up paying for. So anyway, the initial job claims, we're still the trend has not changed. That's what I'm looking for. I'm looking for the trend to change in this, just like it has here. See, it probes down, it goes up, comes back down, doesn't take that out. When we get over here, we're starting into the recession area. Same here. We're down, we take that hump out, go up, come down, come back again, take it out, and that's that portends the right before getting into the recession. So that's what I'm looking at here. A move back above 240 at this stage, and I'd say we're really close to the recession. Okay, so that's the first model. Let's take a look at the spread between the 10-year and 2-year, 10-year Treasury bill and 2-year Treasury note. All right, so you hear about everything's inverted at this point in time, but what I continue to watch, what I've always watched, is the spread between the 10-year and 2-year. We are not at zero yet. You can see right here, I'm going to leave my crosshairs right there on zero. Every time we dip down, we still have time before the recession kicks off. So crosshairs on zero, we dip down here, take back off, we have a recession. Same thing over here. It's no change. We just have not gotten down. We're 20 basis points away from zero right now. We still have, in my estimation, my opinion, based off of watching this stuff for decades and decades, no matter what's taking place right now, we still have room to move to the upside, and I think in a grand fashion. There's several reasons. It's not because Trump's in office. It wouldn't matter if Trump, if Obama, if Hillary Clinton were in the office. The end of this bull market's going to end the way they all end. It doesn't matter who's in office. Our presidents, our politicians, they can affect short-term markets, which has been the case for the last 18 months. But they cannot stop what transcends them, and that's the overall movement of the markets. That always emerges, and I think we still have plenty of room to the upside here. So no harm. I'm still bullish, still looking to buy in my longer term portfolio, looking to buy stuff. So that's all I have to report on the economic models. I think it's still good to go. Not saying we can't. What you have to understand is in these, even though I'm still bullish, doesn't mean we can't still experience a 5 to 10%, pop to the downside at any point in time to reset things. That can always happen. But I still believe 2020 is going to be a crucial year. A lot of stuff I'm looking at looks like it coincides with 2020. So we'll see. But anyway, it's as far as I'm concerned, full steam ahead. Hey, this is the end of this first video. Thanks for tuning in. It's BA out.